Happy Tuesday. So, how's everybody doing? So we got Dex, Tara, Kimberly, Lee, Suckbear. Hey everybody, glad to see you. Let's share the slides. As always, 30 minutes awesome. Fort Dickerson right here in Knoxville, Tennessee. This is probably a picture from last year because the azaleas aren't quite blooming yet. So we got on tap today, right above me here. Can we squeeze higher? We're going to talk about it. Is oil starting to move? It's a few people have been talking in Discord today about oil's potential. We'll talk about it. We usually cover it. And then, of course, your requests, as always. We'll do that for at least 30 minutes as part of 30 Minutes of Awesome. First off, I want to make sure anybody that's brand new, you got to hit the subscribe button, and then you can let me know in the chat right over on the bottom. It should be popped over to the side, I guess this way. Yeah, over that way. Got my left and my right backwards here. Should be over to the side of the video if you're watching on a browser. If you're on mobile, maybe below the video, down low. And if you want to get in Discord, make sure that you go check out the link in the description. We got a $5 special for that. And coming up tomorrow, I have a special opportunity for those that are on the email list. If you're not on the email list, go hit up the links in the description. Maybe I'll have something to post on YouTube. I don't know. So anyway, yeah, we'll hit GC. Nice pop on that one today too. Dollar dropping like crazy. All sorts of stuff moving around. Trump indicted on 34 counts of classy felony, whatever. Just looked like a cut and paste job 34 times on the indictment. Anyway, the press conference was just a meh that the DA did just a few minutes ago. So anyway, looked like we got a dip in the market and rally right back into the close as the arraignment hearing wrapped up. So good evening, Sam, Jason, Lee. Glad to see everybody. Remember, if at any point you're new here, let me know in the chat. I love to welcome new people. I have not been doing this a long time. We just wrapped up 2 years of me doing this guru thing, whatever you want to call it, teaching people how to do what I do. And it's been a wild ride. Thank you all for coming and watching and participating with me. This has been life-changing for me and my wife Kimberly that's in the chat there. Thank you all. And here's the 2 more years and hopefully many more after that. So let's actually get started. Let's talk about some stuff I brought. And let's kick it off with the title, Can Big Tech Squeeze Higher? I was talking about this morning. There's potential for squeeze 2.0. Seasonality. We have seasonality that could kick in. This historically, over the last 20 years, is quite a bullish month for both Nasdaq and S&P 500. And it's quite bearish for VIX. So keep that in mind as we move forward. Now, CTAs, this is computerized trading algorithms, are quite short. And they're giving out numbers for S&P 500 here. And the flows, 1 week flat, buy about 30 billion, up big, buy about 31 billion, and big down, sell 8 billion. So not much downside potential, but a lot of upside potential for a flat to up tape. 1 month, buy 40 billion, buy 43 billion on an up tape, and only 9 billion to sell. So what's that saying? It's saying that the algos are pretty short right now, and they have a long way to buy if they start buying. So even though it seems like we made a huge rally right into the end of March, we could see a big pop. All right, I mean a big pop. I've been kind of on beating the drum for the squeeze for several months now. We'll cover the charts, but we ain't seen nothing yet, basically, is what the summary is here. So here's the buying, here's the kind of net right now, and here's the selling. So we're net short on these trading flows. What if that flips long? What if that flips to buys? So S&P breaking out this past week here, breaking out of the wedge and the downtrend into a new up channel, and that's the channel I have on my chart. We'll go over that in a minute. And Nasdaq, can we break that 14,800? Actually, we kind of topped out at 13,800. They're showing 14,000 right there. I've got 13.8 on my chart. If we break above that, we can see a massive run back up into this 15,000 area. So it's out there. It's potential. And big tech has shown that it's leading the way, with Apple and Microsoft kind of pulling out in front. That leaves a lot of big tech, the Amazon, the Netflix, the Google, the Meta. A lot of money can flow into those and catch back up. So just keep it in mind. If you're waiting for that next drop, that next leg down, it may never come, with everybody kind of waiting for it. So again, never bet against America. We've seen a huge uptick in buying U.S. stocks worldwide, but we're still lagging. We're lagging the rest of the world here. What if we catch up to the rest of the world, get more money flowing back into stocks? Kapow, the thing can pop. It'd be huge, all right? There's lots of potential right now. And we've been selling American stocks since January of 22. So that's a year. That's like 15 months, 16 months now. Been selling. What if we catch back up to the rest of the world? Big pop potential. Of course, weakness in VIX would be the opposite of a pop in the market. Of course, right? Like, if we get a pop in the market, VIX drops. Volatility in the market and the market dropping, people scared, that's what creates VIX popping. So we can cover that a little bit here. So already, Google searches showing the crisis is already forgotten. Searches related to bank withdrawals and getting your money moved already dropping back to what is kind of the normal since the beginning of the year. So we've already passed the crisis forgotten. Everybody's kind of moved on already. Now, circling around to oil. Rally back up to the top here. Oil soars as OPEC announced that cut this weekend. Saudi Arabia committing to a 500,000 barrel cut per day through the end of 2023. So here we are, 3 months in, they're committing to a 9-month reduction of 500,000 barrels output a day. And this article showing 1.66 million. I think the 1.16 million was the actual total. I've seen like 4 or 5 different totals. I guess it just depends on who you're talking to. So right there, Saudi Arabia leading the way with 500,000 barrel cut. Now, is this ultimately bearish or bullish? Well, we're going to talk about that here in just a minute. Now, the Biden administration leasing 73.3 million acres of the Gulf of Mexico to be for drilling oil. That's not going to come on instantly. That's like maybe next year down the road. Takes a couple of years to get these leases set up. All right. I was just reading off of the tape here. I didn't make the article. So that's Saudi Arabia right there saying they cut. I don't know. Anyway. So Biden leasing out 73.3 million acres of the Gulf of Mexico for drilling. Like I said, that's not immediately bullish or bearish. That's going to take a couple years to come online. You got to get platforms, you got to get the drilling, you got to get crews, you got to get all the stuff set up. You got to find the oil and then get the production going. So that's a couple years out yet, but Biden kind of upsetting some people by actually doing that lease deal. They raised like $300 million by doing those leases. Morgan Stanley cutting their oil price forecast, even in the face of OPEC's decision to cut output. So some people were immediately raising their prices to over 100, but Morgan Stanley and Citibank kind of coming in and saying, we don't think that oil's going to cross 100. So yeah, that's the big key, Penny. We'll talk about that and how it relates to gasoline prices too. So the big deal, it's not necessarily the oil production. It's the fact that we have refineries going offline in the United States, and there's not new permits, and we haven't built a new one in years. And that leads to higher gas prices because we can't produce the distillates. We can't produce diesel. We can't produce gas. We can't produce gasoline. We can't produce it. That means we have to import it if we're beyond the United States capacity. So it's kind of like goes back into the green infrastructure plan that we're not going to have gasoline, so we don't need to permit new facilities to distill it. Anyway, I don't know. This is interesting, though. When you read this, right up in here, OPEC probably needs to do this and stand still. And the decision to cut reveals something and it gives a signal of where we are in the oil market. This is Morgan Stanley analysts saying this, all right? It's the thing I was kind of pointing out in Discord today, is that a decision to cut means that there's weakness in demand. If demand's strong, they're not going to cut. They're expecting some kind of weakness in demand and need to cut the output and be preemptive on this so that the prices don't go lower than they already are. It's a price support kind of system. I mean, let's be honest, right here, Rats noted, when demand is roaring, OPEC doesn't need to cut any output. In fact, they may need to increase. But right now, they're cutting output and planning on cutting output. So that's kind of indicating there may be a weakness of demand that's being forecast. You know, those Saudi princes and stuff aren't dumb. All right, moving on. S&P 500 still maintaining the bounce here off of the downtrend that was 2022. Can we get a breakout higher? We need to break out higher than we were on this circle 1 right here. You know, this 1, 2, 1, 2. This is a nested set of 1, 2s and can lead us to much higher prices over here. But we have to actually break out. 4,300 does stand in our way right up here at the high from August. This is a significant level. Now we may push right on through and head up into this 4,500 area on the first go, and then retrace right back to 4,300, test it for support before we can get the bigger rally. And these out here are not based on time. They're just kind of stuck up there as placeholders for where price level, the price levels where they might get to. So don't think I'm projecting that December 23 we're going to be up there. No, these aren't put out necessarily time-wise, and the scale on the right side of my chart is not the same as the left side of the chart. Now, this is a 3-day chart. These are 3-day candles. So we could see this probably late summer, maybe up into this area, but it could go faster than that. It could go way faster than that. And so I don't want anybody to feel left out or surprised. I don't have the best time prediction ability. Predicting price is way easier than predicting time and all the stuff. So right now we've kind of been on this path. This correction here took a little bit longer than I drew back in early January when I put these 3 white arrows on the chart. At first it looked like we were going to hold it, and then we took another diversion down, and so we're out here. Well, this could possibly be accurate on the time. Somewhere out here in June, July, maybe August, by the time we get up in that area. Now, seasonality wise, we do tend to chop in June, so keep that in mind too. May, June tend to be kind of choppy with the rally kicking off later in the summer. Now, for the past few weeks, we have been, since we bottomed on March 13th back here, we've kind of been in this trend on ES. This is the S&P 500 futures chart. We tried to break out on the FOMC. We came down, tried to break down immediately after that, and then kind of popped up and rolled over one more time, bounce again, and then it's been nothing but up until today, get a little bit of pullback. Really, we've just kind of been sideways for April so far. 2 trading days and just kind of sideways. And the little bitty dip in here was when the Trump indictment arraignment hearing started. We got a little drop and then rallied right into the close and just kind of parked right there, almost even with where we started April. Crazy stuff. Round trip in 2 days around the world. All right. That's kind of the summary of that. Popping over, looking at the simple S&P 500 chart. We are attempting to break out of this consolidation box. This is the consolidation box we've been in almost for a year. Started back here in May when we dropped in. Broke down, broke up, broke down deeper, made that October low, popped back up, couldn't hold it, then popped up through, couldn't break out, right back to the bottom. And now, here we are, sideways for, gosh, what is that? May, June, July, August, September, October, November, December, January, February, March. I see, what, 11 months? We've just kind of been sideways in the market. Highest we've kind of been in a number of months. So let's rally. Let's go. Looking at the futures, found resistance right up here at the blue line. That's the high from December, high from January, February, and now the high so far. If we can pop above that, that's looking positive on the ES futures. Probably go up here and test this 4,300 area right here. And if we start breaking out and get an extension, we could come up here. Now, if we stop at 45.20, that's like a big red caution, red alert caution. If we just go straight up here and hit that and turn down, that can lead to a lower low, because that's like a 1, 2, 3 up off the bottom. 1, 2, and this would be a big third move. The first initial move up into December, a retrace here late December into January, and then this move from January up to now. If we stopped right there at 45.20 area on ES, that can roll over. So caution right there. If we just pop right on through 4,300, stop right there, that can lead to a lower low. So there's still bearish potential in this chart. I will be more bullish breaking out over 4,300 and staying above 4,300. We go up above 4,300 and come right back down through 4,300. It's like, watch out. All right. In Q right here, up in the red zone that we consolidated back here all the way in March of last year. Popped up, popped down, popped up, popped down. We need to break above this. So 13,800, that area. And if we can get above that, then we'll go retest these highs from back here in late March of last year, around 15,000. So it'd be really nice to see a rally right up that, break above that, and keep going on big tech. Russell showing some weakness, getting a retrace, tried to hold the breakout, hit right up that line and reversed. That was not quite what I was hoping for this morning when I did the morning monster, but we're right down in the consolidation box. That kind of sucks. So caution on Russell. We could see a deeper retrace once again back to the bottom of the box, back down to 1740 on Russell. And IWM, you just knock a decimal place off and a couple, maybe a little bit more, and back to 170-ish, 175.5 would be back to the bottom of the box on Russell. Dollar showing that weakness today, closing below that consolidation box, probably set up on the path to go down to 97, maybe even as low as 95. 97, 95 in this zone down here. Back to the mid 90s. That's probably going to be bullish on gold. And I should flip over to the red list that has gold on it right here. Gold popping. That's on that dollar dropping. Next resistance up here around 2075 on GC. How does that relate to GLD? Resistance up here at 190 on GLD. And we can see the potential for a deeper retrace. Potential it grows higher as we get higher, and that could come all the way back down to 182. If we just bust right on through 190, 199 is the next potential, and we can still see a retrace all the way back down into 182 area if we see that rally right up to 199. Whew, that's a mouthful. Oil chart right here. We have popped up, stuck on the roadmap line, this daily roadmap line, 2 days in a row. This morning I was kind of saying that we could see this thing pop up, rally right on back up to about this 92 area, then retrace right back to the roadmap line around the 83 area, back holding above these highs, retest. But we haven't been able to break out over those highs yet. So that's something I've got my eye on. My alert is up here around 83. Oh, excuse me. Lunch talking back to me a little bit. My alert's up here around 83. We get a break above that, I'm more convinced that we're going to see higher prices on oil. The resistance that it's met right here with the roadmap line and those prior highs could see a retrace right back down to this zone down here. So this is like the story of two potential paths. Redraw those with arrows like this, probably up into this 29 20 up into this 92 area, and that's where we topped back here in November. We could see a rally right back up in there, and we kind of did this double top thing where we hit the roadmap line twice. There's going to be some supply right in that zone right there. People looking at book profits, and then we could see that retrace right back to the roadmap line and retest where we broke out from. Right now, it is not a breakout. It is just a gap up right to the roadmap line. That is resistance, and we can see a retrace. So be careful on oil. There's potential that this was the bottom. I was looking for the 65 price, and we finally tagged it. We held down there for 4 days, and then we rallied, and then we popped. But we have not broken out above the recent highs. Not bullish yet. Be careful. All right, gasoline is trying to break higher than what we saw right here. We are higher than we were in January. We did not break higher yesterday. And we have this high back here from October that we still have to get above to go make higher prices on gasoline. But this is an uptrend. It's kind of like a channel, you know, kind of arcing off a little bit. But we are above the roadmap line, below that high, and we can rally right back up to the top. There's not a lot of resistance in here. We didn't stop a lot on that way down. So this one's the major resistance right here, right around that $3 area. Gasoline gets above that on the futures, RB1. Probably going to go retest the high up there around 430. Natural gas still looking pretty bearish. Going to make a lower low, more than likely. Copper still kind of consolidating along the roadmap line. We bounce right here, break out higher above 420. That's going to set it up for a move up to about $4.87, maybe $5 on copper. Lumber still looking weak, probably going to go lower low than what we saw back here in January. Housing, got to throw that on the week chart because you can't see it. Weekly chart, still looking like it could retrace to the roadmap line. Nice resistance there at the 50% retrace, and probably going to extend lower. All right, that kind of wraps up the futures. Bitcoin, really quickly before I move on to your requests. Bitcoin hanging out right above the roadmap line on the weekly. On the daily, we reached the head and shoulders target at 29, and we've just been consolidating for a bunch of days. I mean, look at that, 2 weeks-ish. You know, we kind of came up here March 17th, and we haven't really gone anywhere. Just a slow kind of barely drift higher. Hadn't really gone anywhere, just consolidating. This is setting up for another pop, potentially. We kind of did this right over here. We popped down and then popped up and then popped down bigger and then popped up bigger. So this consolidation type stuff is going to lead to more volatility in price. It's probably going to pop. So it's kind of like the watermelon seed squeeze theory. You can see what we did over here, sideways for a bit, popped up, popped down, and then stayed down here for a little bit and then popped back up. So that's what we got on Bitcoin right there. Ethereum trying to break out today. This is very positive for Ethereum to get on up to this 1950 to 2000 area, and then we could potentially see it retrace right back to the roadmap line. Again, this one's a little more advanced. It bottomed out much earlier, back in June. Did not make a lower low in November and in the fall like Bitcoin did. So the count on Ethereum is a little more advanced on the pattern. And so therefore we may not see a lot more upside before it gets a deeper retrace. All right. Your request. Jump up to the top. NVIDIA. Still. NVIDIA. Come on now. Keyboard. Work. NVIDIA. Pushing up. Found resistance at this 1272 extension of this pullback from December. Kind of hanging out right there at 277. It's been hanging out there for several days. If it can break above, it's been hanging out there for what, March 22nd through 10 days, 12 days now. If we can get a breakout above that, the next level up is 335. 335 right there. Let me delete that off of there. At 335. That's probably going to be it for now. And we'll probably see a sideways to, and we could see a strong reaction back down, but we'll probably see a sideways for a little bit. That is going to extend that move quite a bit. Now it can break out higher and move on up to this 470 level. That's entirely possible, but that's the prior high zone right over here. And that starts extending the, getting the fibs very extended. So we may see some resistance as we come up into that 335 area. Hanging out right at this 1272 fib. People that tell me the fibs are crazy or, don't mean anything. Well, that one sure did. Stopped right at that 277 and just charging up. Can it get the final move? That's the caution. We could just come right back down, retest the roadmap line back down here around 215. That's entirely possible also. So be careful. Know your parameters. The downside risk versus the upside potential. All right. Nugget, NUGT. Yeah. My stuff doesn't always work the best on leveraged instruments like these 2x, 3x things. But if we were going to do a projection, this looks reasonable right there. That we had a measured bounce type setup that I teach in my fib class. And the potential for it to go up into this area, right up in there. Want to break above that, which it looks like it was pretty much doing today. That leaves it at the minimum 62 and potentially up into this zone right up there around 90. Not too shabby, not too shabby at all. And we may see it top right there where these highs come across. Funny how this stuff all comes together right in that area right there. So that may be where she tops out right there. All right, moving on. TLT, just kind of consolidating on the roadmap line. Having a little trouble getting through the roadmap line. If it can break above these highs, I've got like 3 of them now, 4 of them. 1, 2, 3, 4. If it can break above that, probably going back up to this 115 to 120 area at the minimum, possibly as high as 130. If it turns down there, probably going lower low than we saw back here at 91. That's the parameters. Consolidating right here, though, indicates that it's probably going to pop. And it's got the measured bounce set up. And it looks pretty strong here for popping up. Probably 125 would be my guess on where it's going to pop up to. All right, moving on down the list. Did GC, VIX. Yeah, we can cover some VIX. So VIX right back down to the lows. Showing a little bit of volatility today, a little bit of green candle, but just inside. It's just an inside candle on the daily. And the way I was playing this, SVXY, I bought $60 calls when we were down here. When I put this arrow on the chart, I bought some $60 calls when we were down here at 57. And looking to book those when we hit potentially 66. I'll look at it, but I'd really like to see a move higher than we saw back here in February and in March. Up at least 67, possibly up to 70 or 75. I've got lots of alerts on here, as you can see. Lots of arrows. Expecting a bunch out of this. A lot of the VIX plays are decaying assets. This one is not. So, stuff like VXX is a decaying asset, always going towards zero. UVXY, one of the ones I traded in the COVID crash, always trending towards zero. Has to do reverse splits just to stay listed. Same with VXX, but SVXY is not in that boat. Now, SVXY rallies when VIX drops and drops when VIX rallies. So, got to keep an eye on that one right there. I am long, expecting that pop. All right. Now, why? Well, let's pull something up really quickly. See if I can find the seasonality chart. Yeah, right here. Pull this over. Make it bigger. So, 20-year seasonality for VIX. VIX tends to pop mid-March. That's what we saw. And then it tends to drop through late April. A little bit of volatility in early May and a lower low in May. That's why I went with June calls. Looking to play this whole move down to the low in May, potentially. Now, as we get to that low at the end of April, I may jump off and jump back on when we get some volatility in May. So that's what I'm expecting. That's why VIX right here. Actually click the chart and type it, not type in the browser on the other window. So right there, we saw that pop in March, drop, and this thing can push on down into the $17 area and take SVXY on up higher. And that's like to kind of flip the chart. That was the move down in March and the move to a lower low in VIX and a higher high in SVXY. This is a short VIX right up here, potentially late April into May. All right. Anyway, how many times what, George? All right. There's VIX and looks like cat. Found resistance, pulling back today. Not as awesome. I was hoping for a breakout. Couldn't do it. Got kind of a downtrend going on cat here. Got resistance. Found resistance at the roadmap line. Right back down. If it holds above the lows and comes back up through that high at 233, that's positive. Otherwise, nothing awesome. Maybe lower, maybe just sideways, maybe just more consolidation like it did back here in November, December. All right, AG. Majestic silver still looks pretty bearish compared to the SLV chart. It's got a lot of resistance right there above us. Yeah, SLV itself, look at that, potentially breaking out right there. Oop, moving their fibs instead of the chart. Could see prices up 23, 25, and if it gets super bullish up here around 31. That could last out into late this year potentially. But the path it's on right now, that can get up there by June, July. All right. And GLD, like I said earlier, I got my arrows in the way. Makes it hard to see since they're not translucent. Potentially coming up to 190. So a breakout in gold and silver out of the consolidation it's had for a little while. All right. Mora stuck below the roadmap line, below that resistance right there. If it can get up here above 950, possibly even $10, that sets it off for a move to 15, possibly even up here. If Bitcoin can move, Mara is going to move much bigger. I mean, we're just waiting on Bitcoin. We've been waiting on Bitcoin. That's the ticket. I mean, Bitcoin back above 35,000 is where the miners really start taking off. Riot actually outperforming a little bit, getting the move up, consolidating higher. It's already higher than it was in February. Already higher than it was. Not quite higher than it was right back here. Right at the highs. Retesting the high right there. Higher than it was in February. Higher than it was back here in September, but not higher than it was in August. That one probably going to come up into this $15 to $20 area right up in here. So the move potential, not quite as big as Mara has, but Mara is lagging, whereas Riot is leading. All right. ALGN, just consolidating between, that's where the gap down was. And just consolidating in that gap down area right there. Above the roadmap line, in that gap down zone. It's got to get above that to be bullish. Otherwise, probably just more sideways. If you're wondering why it stopped right there, it's the gap. It filled the gap and just, that's where supply was. People got caught on the gap down. They started selling when it came back up to fill the gap. Not expecting much more. It's kind of psychology of gaps like that in the chart. We haven't seen a lot of those in a lot of years because we haven't really had a large market pullback, but that's That's kind of the psychology of that stuff. A nice big fat one that's hanging out there in FLX. This one, it's got a nice big gap right up here around 500. The Netflix looks like it's darn well getting ready to go fill. Nice, beautiful potential. If this one will break out higher than the high it had in February, we're going to be on a path to go fill that gap. And that's not to say there won't be another one of these retraces in here. There probably will be on the way up there, but we're probably going to go up and fill that gap at 500. Be a healthy percent return, getting close to 50% roughly from where we are right now if we popped up there. All right. Twitter, TWTR. Twitter is not even... That one stopped. That's private. Come on now. Messing with me, Jason. Spot. And Twitter went private. So spot on the path here. We've broke above those highs. Probably going to find resistance up here around 158. So, and GE. And just keeps on chugging higher. Like it got done with its low back here in May of 20, and it's been working on getting out of here. Working. We've gotten above all these consolidations across here. Got to make a move on up and retrace, and then at some point we're going to come back and retest this zone right here. It was too much resistance for too long. We'll probably come up to maybe 120, where this little high was right over here, right near 120. Probably rally right up to that area, maybe retrace back, retest that, and then get the bigger breakout. That would be what I would likely, what I would see as likely right now without, it's kind of hard to make any projection right now off of what it's done. We can look at the fibs, 1618 right up there, right at that high. That can easily, you can stop right here at 99, retrace that 112, 117 area looks more likely. Could poke just a little higher, retrace before the bigger bounce. So that would be my idea on GE. GNVX. Does not have a lot of history. Yeah, that proves the point, right? This proves one of my points that new IPOs tend to be bearish and make lower lows than the IPO. It's like a 90% likelihood that an IPO will start out bearish. Even though we may get a rally, some excitement for listing, it tends to be in three-wave moves that are corrective, and then we get a three-wave move down, three-wave move up, three-wave move down to a lowest low, that gap down, that is all bearish. Now that we've done that, made the lower low, we can start to work on something that's more bullish. We have a gap down right there that we've got to fill. This thing made lots of gaps, so need to see something higher than probably this right here before I would really expect any kind of breakout move. Lots of resistance above. Not really a quality company. Losing money. Money's expensive right now in this environment. And for a company that loses money, that's not overly bullish. Need to see them turn a profit. And it looks like they plan to lose money. So, all right. How much leverage is SVXY? I don't think it has any leverage. SVXY. You'd have to go pull up the... It just says short VIX. They play the contracts, the forward month contracts in short. Anyway, I would not buy calls, and I would not. So VXX, everybody knows it's a decaying asset. Like everybody knows it's going to zero. So it makes it incredibly hard to buy puts and make money. It just went through a reverse split right here, 1 for 4. So it just went from 11 up to 40, whatever. So that's a reverse split. It did one right back here. It does them almost once a year, maybe every 15, 18 months. And it drops and it keeps going to zero. And when we get back down into the single digits, we'll do another reverse split and pop back up here again and continue. And this is like the fourth or fifth relisting of VXX. They've had to liquidate it and relist it and recreate it several times because this thing is decaying. It decays to zero. The cost to carry the VIX contracts forward each month costs the fund, and it decays the fund's value. Now, SVXY does not have those reverse splits in it. They actually make money shorting VIX month to month to month. And the periods where VIX starts spiking, like back here in 2020, it created a large drop. We went from upwards of 68 down to a low around 24, and then it started to climb back up again. Went through a little volatility in 2022 when we pulled back in the market and working on going higher again. I like things that don't decay. Decaying assets are hard to trade. It's hard to, you can't really sell puts or buy puts. You can't sell puts. You can't buy puts and make money because they price the decay into the puts. So to play a drop in the market, it would be better, smarter to play puts on SVXY when you expect the VIX to pop. All right. And if you expect the VIX to drop, play SVXY long. All righty. Shop. I'm still in shop. Sitting on a very small profit right now. Looking for it to break on out. This is a beautiful measured bounce setup. Had the gap down, so it's got a little resistance. We gap down like that. Gap still applies right there. We gap down from there to there on earnings. We break out above that 52 area, probably coming back up into this at least 58 to 60 area and potentially the 72 to 89 area, the bigger play off of the measured bounce. Kind of expecting to find some resistance around that 64 area, retrace a bit, right back to where we broke out from right here at 54 before the next move up to that higher price. So far, it's taken a little longer to do that. We did retrace deeper, but that's kind of the path. Just move these babies over like this. All right. Amazon. If we can get through the roadmap line, that's very positive for Amazon. Very, very positive. We do have the resistance right there. We popped up and dropped right back. Right back down around 112. If we get above that 112, game on, baby. I was looking for bullish, probably get back to 145 by the summer. 145 to 160. It's kind of my target area right in there. By June, July area, time frame. That's what I'm expecting. Like I said, Amazon can catch back up quickly if tech goes on the next squeeze. And Apple, lots of people like me to cover Apple. This one does have resistance up here at this high. But like I've said several times, we've now broken out above that 156 area, probably on a path to get to 200. I don't know if you just heard my stomach talking, but I'm not hungry. It's just talking. I don't know if the mic picked that up or not. The mic right here. Anyway, MPC, MRO, yeah, MPC. Getting a little pullback. Got hit today, looks like. Probably going to come down and touch the roadmap line. That's what it probably needs to do. Hadn't done that in, gosh, a long time, since back here in September. Probably wants to come reach down and touch the roadmap line. And MRO. Picked it up on the mic. Yeah, my stomach was like, "Rrr." Anyway, it's MORO. Marathon popped up right to the roadmap line. Final resistance. It's got this resistance built up here. It's got more work to do. Chevron is the one that looks most bullish, really, to me. It does have resistance above us. I am long some Chevron, looking for this move up to 198. Of course, if oil retraces, it's going to take most of the stuff down with it. VLO, retraced right to the roadmap line. Once again, right off those highs. Yeah, popped up yesterday, hit that, right back down. XOM. This one potentially breaking out over, it already is above the resistance here. Didn't get a big retrace today. Could push up to 125, 132 on the upside. Trying to remember some of the other ones. PSX. See this one, found resistance right there at that box and right back to the roadmap line today. And let's see, any other ones I can remember? FANG. Right there. Still lower high. OXY. Still a lower high. Caution is advised. Hey, Terry. Glad to see you. So, let's see. JP Morgan. That's my sister-in-law Terry there in the chat. Glad to see you. Wife of my big little brother, as I call him. He's much bigger than I am. And JPM right there, consolidating under the roadmap line. Could see that drop down right there. Caution. And let's see, what was the other one? PNC. That looks pretty horrible. That can easily go lower low. The banking crisis is not on the all clear, even though we quit Googling it, and that was kind of what I talked about at the top of this thing. We are not on the all clear for the financial crisis yet. So other banks, I mean, look at that. CCNE reaching lower today. Like significantly lower. And caution, all right. XLE. I do chart XLE. It's, you know, nothing awesome there. It did bounce right off of the target zone. I mean, hit right in the target zone that I drew all the way back here in February. Coming up to resistance, we got to get above 87, and then the next test is above 93 to get 100 to 106. I'm not as excited on that stuff until. This is my preferred weapon of choice, and it's still on a downtrend right here for playing oil. You see right there. Holding the high. Tried to break higher. Holding the high. Holding the high. Holding the high. Holding the downtrend. So, remove this line because it doesn't mean anything. So we're holding that downtrend right there on oil. Looks like it may retrace. Now, if we get a break back up above 30 or so, that could be a first. Back above this high, then above that high. How many highs do I need? I just need it to pop above this, retrace, hold the roadmap line, start moving up. Then I'm going to be looking for higher highs. This does have significant downside resistance built up here. Moving the wrong thing again. I'm sure this is super interesting, Terry. If you're still here. So I did a 1-for-4 split. I mean, a 4-for-1 split. This was a real split, you know, where it went from a high price down to a lower price back here at the peak. It was like at 210, I think it was, before it split. Maybe it was 230, 240 before it split right here. We've seen it retrace. So this gives us opportunity to play right back up to new highs on UCO. This is leveraged like 2x, I think. So VDE, Victor Delta Echo. Just kind of consolidating here. Still a downtrend. I'd love to see this break out, but we're just kind of hanging here. All the energy kind of looking little sideways to bearish. We haven't broken out yet. That's why I'm major caution on a lot of this stuff. So XOP hanging out below the roadmap line. Yeah, this is oil and gas exploration. This has more benefit off that 73.3 million acres of gas leases, more profit potential than just oil popping. So make sure you're playing in the right sector. You know, this is like a sector inside a sector. You can't just say oil and gas and you know, oil floats all boats. Oil and gas exploration is a different sector of the oil and gas market than just broader oil. All right, make sure you're in the right lane. Tesla found resistance at the roadmap line, pulled back. Some people thought it was pulled back a lot. I beg to differ. I think it just pulled back a little bit. I mean, these prices are huge, so it feels like a big move, but I mean, look at where we came from. We retraced all the way down here on March 13th. We went all the way back up here to 207, from 163, 164 to 207. Get a little bit of retrace, and you know, some of these candles, like yesterday's candle, these two candles are much smaller than not yesterday's, but 2 days back, Friday. These candles much smaller, but you know, not getting the continuation yet. Got to break above that stuff. That can lead to a deeper push down to this zone right around 145 where I was looking for. We came up short on this push. This may be the retrace, and then we get a push lower. So be cautious. And this can come over here. We can get that deeper retrace that I was looking for back there. If we do push down to this 145 area, that's a measured bounce setup. Also fills this gap it left open right here. All right. Just know your parameters. Know the parameters. All right. SC. Sierra Charlie. Keyboard. There we go. What the devil is that? Short-term momentum. I don't even know what that is. Has a relatively bullish setup, but no idea what this is. Momentum index. Potential to go out to 680, 700. S&P over BMV. It's a lot of abbreviations. Don't even tell over here. I'd be careful on that. SCHW. Looks like we're going down to 47. Oh, we already touched there. Touched and bounced, and probably back to 47. All right, Sam. I thought you were just putting in your initials, SC. All right, there we go. Anybody want to see anything else? We kind of ran the gamut here. Meta, another one with a nice potential. Holding up strong. Potential to catch up, 324. It's another one of those gap plays right there. SQ, another one of my favorites for potential. But the Hindenburg news pushed it down. It has not recovered yet. It needs to get back above 75.80 area to get some upward momentum going. UNH potentially coming back up to the roadmap line. Potentially. Find a little resistance there. Got to get above that. Got to get above 500 to work on these upper side targets. Upside targets. 620 if it can start breaking above 500. 500, 520, 600 on the upside. And then GS came down to the target. I'll put that target back there in January. Got there, even went down a little further than the target. Needs to be back above 343 to get some upside going. MA looking strong, and Visa also looking strong. Those are two potentials that are likely to go higher. Look at that. MA, perfect roadmap line bounce. Break above this, back above 374, probably headed to 400. And then Visa, basically already the entry right here. Already higher than this high right here. Target right up here, 240 at the minimum. Potentially 257 on the bigger correction it made back here. All right. That's going to wrap it up. 5:53. That was at least 30 minutes, I think. Thanks for coming, everybody. Remember, hit the subscribe button. Make sure you subscribe. Hit the bell with the notification things so that you know when I go live at 9:15 tomorrow morning and every morning. And reminder, doing a special crypto thing on Friday when the market's closed. So thanks, Jason. Have a good one. I'll see y'all later. See you in the morning for Morning Monster. I'll get the link up. And have a great one, everybody. Spend some time with loved ones. We'll see you again next week. Thanks for coming. Bye for